The insurance industry is seen as an expert in this space and a thought leader in this space, and it's providing leadership, and Oasis is part of that.
Welcome to the InsTech London Podcast, number 32. I'm Matthew Grant, one of the partners at InsTech London. And this week I'm talking to Dickie Whitaker. Dickie is CEO and co-founder of the Oasis loss modelling platform. He founded Oasis in 2011 as an open source, not-for-profit business. And the platform is there to provide a way for companies of all sizes that have created catastrophe models, which are used by insurers for assessing the risk from flood, earthquake, windstorm, and many other natural and man-made perils, to make these tools easily and cheaply available to a wide community, mainly in insurance, but actually increasingly outside of insurance and as well. Now, Dickie and his team are based in the old leather market in London. It's a great place to work, but as we found later, not ideal for recording a podcast. So please forgive some echo and background noise in this one. Okay, I'm here with Dickie Whitaker, who is the founder of Oasis Loss Modelling Framework. Dickie and I have known each other for over 25 years. Dickie, when we first got together, you were a successful reinsurance broker at Guy Carpenter. Just give a little bit of perspective of what's happened since then.
Well, quite a lot, Matthew, actually. I think, so to start with, there was an organisation called Equicat, which was being formed at that point, now called CoreLogic, as most people know. And they were looking for somebody from the broking side to help the team, that actually included you, to help them understand what the insurance industry was about. So I started working for it. I just thought, this is just so much more interesting than broking. And that sort of was the start of my interest in cat modelling, which I then moved from there to other parts of the analytical function in a broker, ran teams in London and New York, and then decided that actually, if we were going to do something really useful, I needed to be free of the bonds of some of these big companies. So 7 years ago, I left Guy Carpenter and pretty much instantaneously started Oasis, although I was funded by Innovate UK and some other innovation funding, which helped me get off the ground.
Can you just say a few words about what Oasis' core business is, and then I'd like to talk a little bit about what makes you unique in certainly the modelling space, and I think it's also a really useful way to think about some of the other areas of technology and data coming into insurance.
I think fundamentally, when after sort of 20 odd years at that stage, or a little less than 20 years of being in the modelling space, it became very obvious that we weren't being well served by a vibrant community that offered choice, that offered transparency, that offered value, and actually that spawned innovation. That was not happening. So as a result of that, I thought, well, somebody better do this. And if nobody else was going to do it, I realised I was going to have to do it by myself. So I went to talk to a bunch of chief execs in Monte Carlo, and I said, if I start this, will you back me? They said yes, and then that's how Oasis actually started.
And the core business element still is today is around catastrophe modelling. And one of the things that obviously come from that background myself, and looking what's happening in the sort of mainstream insurance space, and people talking about disruption, is in a way you yourself set up as a disruptor to the established companies at the time, because you had a sort of slightly different way of how you thought people should be able to use models and access the output and build them into their own business.
The existing marketplace was essentially dominated by effectively a couple of big companies. And when you get that sort of situation, then you get huge inertia in the system, you get barriers to entry. When you get barriers to entry, you get lack of competition. When you get lack of competition, you get lack of value and you get lack of innovation. So we were trying to do all of that. And the way that I thought was the best way to do it, and at that stage I knew very little about open source software, was to make the software open source, to make it not for profit, and to make the community work together to solve this problem.
I was going to say how easy, but how did you go about what made you successful in raising funds from some external parties?
I think there is, in essence, a couple of things. I mean, you know, like all organisations, like all companies, you have to have a vision, you have to have leadership, you have to drive that, you have to have enthusiasm, you have to have energy, and of course you have to think about what you're doing. So you really have to have a good story, and you have to know the detail. And because I've had, by then 20 odd years or something of experience in cat modelling, I could walk into these places and I say, this is what we're going to do, this is how we're going to do it, and people listened.
So if anybody looking to get funding, you mentioned Innovate UK, I mean, how should they learn more about what's available outside there? Obviously independent of the more conventional angel or VC funds.
Yeah, that's a good question. I think it's essentially you sort of have to find out where these places are. Innovate UK is one, and I've just got some new funds from them actually. Climate Kick is another, so they were one of our early funders, and they got some big amounts of money available. H2020 has been a source of funds for me. There's obviously some challenges with Brexit going forward. There's something called the Global Innovation Fund, and I got some money from them. You get to find out where these things are because you have to live in this space. And actually, many of the startups that use these type of funds, we talk on a regular basis, so we know exactly what the rules are, we know exactly how it works, and we know exactly how to pitch for these things. They're not all easy at all, but you just have to understand the rules and decide which ones fit. And with one company I started called the Oasis Hub fairly recently, we've sort of decided that we don't want too many more of these because they actually come with a huge admin load. So, it's very, very, you can be very careful how you start with some of these things. They're fully auditable in many cases. You need very rigorous systems. You need some maturity in your business to be able to handle them. So these are things you learn. I learned the hard way. Find people that can give advice would be, I think, the thing to do.
Catastrophe modelling itself, and partly what you're doing, you've clearly been successful. You've got, as you can tell us how many clients you've got 30 fairly active member companies that help you direct the future of the company. Why do you think it is that sort of, with all this activity around insurtech and the sort of noise around it, the sort of catastrophe modelling side of it seems to be not marginalised, not really discussed very much. But yeah, there's a lot going on in that space, and a lot of companies, and you yourself providing a platform for, I think it's 19 companies now to distribute their product.
I think there's an interesting comparison between both sort of what started as being fintech and then more specifically insurtech, and where innovation needs to take place in mature industries like insurance. So what tends to happen to begin with is that people end up by focusing on, bright, usually young, smart people, end up by focusing on what they know. And what they know is, in fintech, it was always about payment methodologies. In insurtech, it starts by being how you can actually engage with the customer better. It's about sort of changing ways of intermediation. But what it doesn't do is because many of these people don't have the experience, to go into the real problems faced by these industries, whether it's banking or insurance. So catastrophe modelling is full of challenges. It's full of standards and archaic methods of working and regulation and everything else. You need to really, really understand these things. And it's hard to do that without experience. So I think to some degree, and maybe it's not as sexy as some of these other things. I sort of think it is, to be honest with you. But maybe other people don't think that. So I think they avoid the level of complexity, and they rather focus on, I'm sure AI could do something here. So it's more solution focused than it is problem focused. It's less strategically focused. I focused on a strategic challenge. I focused on a complex issue because I knew that's what the boards of companies I was talking to would actually provide funds for. And I think sometimes some insurtech startups actually don't do that. They look at, I've got some expertise in machine learning, let's see what I can do. And it's not a bad thing, but you've got to be careful because you can end up in the periphery of core businesses rather than the heart of core businesses, which is usually where the value and the money is.
So back on the sort of open source and as a non-profit, how do you attract people to the business and retain them if you are operating as a non-profit?
I think the first thing is I get a lot of people just sort of phoning me up, sending me email, getting in contact somehow or other and saying, would really like to come and work with you because it sounds like a sort of thing I'd like to do. There's lots of talk about, whether or not millennials need to have a sense of purpose in their business or not. Certainly there is a really large group of people that do want a sense of purpose, and so we get that to start with. However, I wouldn't want to say that by itself is going to do enough. So actually we have a couple of companies. I have actually 4 I started, and 2 are not for profit and 2 for profit. And some of them are structured so that people that work for the not-for-profit one have shareholdings in the for-profit ones. So we've created a structure that deliberately tries to incentivize people to do things. And we have the ability to spin out new companies too. So there are some other things we're talking about doing, which are going to be some new startups in this space that will allow some of the people who are still getting their sense of purpose working for working for Oasis, but actually can allow to have some time to build up some sort of equity in some organisations that may make them some money.
How do you manage to run 4 companies as well as all the extensive partnerships that you have, plus the promotion of Oasis?
The only way that I actually do it is they're all connected. So when I go into a meeting with whoever it might be, and I'm talking about some problem that they have and I'm looking at solutions, I'm bringing together 3 or 4 companies that all have related solutions. So there are ones around data, there's ones around models, there's ones around research challenges, and there's one around consulting. But they're all linked.
So in addition to what you're doing in insurance, you're also now starting to be fairly active outside of the insurance world, still in risk management, but now looking at governments and corporates.
So there, what we're looking at is just the commonality of needs between developing banks, developing countries, and cities in some cases. And particularly with structures like the Insurance Development Forum, started 2 or 3 years ago, which also is trying to do the same thing. So ultimately, if you're looking at a country trying to understand the risk of flood or earthquake, it isn't a substantially different question than the insurance industry has. Why not share the costs and benefits of the techniques and technologies that we're using with those places? They are open to having those sort of conversations. The UN has a whole new initiative right now about trying to create efficiency around understanding risk so that it can fulfill the Sendai principles. And the insurance industry is seen as an expert in this space and a thought leader in this space. And it's providing leadership, and Oasis is part of that. So it gets back to improving the margin in the insurance industry by having interoperability and by having common standards that work around the world. And it all plays back to efficiency in insurance at the end of the day.
Yeah, I think what's going to be interesting to see what happens is corporates get more involved in the whole area of risk and natural peril risk. That may actually well then provide more data input to go back into insurance, which in turn provide better analytics for insurance. But let's talk about interoperability. Both you and I are big supporters of the concept where where maybe the industry needs to have ways to be able to access these analytics more easily. You built Oasis as a platform. So when you talk about interoperability, what does that actually mean in practice for you?
Interoperability is just about how 2 different systems or products can interact together. That makes it very easy for the user. I mean, the point is it's about ease of use. It's also about efficiency, therefore it's about saving costs, and that's something the insurance industry is looking at very, very closely. So, simplistically, in Oasis particularly, it's about the full API layer that we have sitting around Oasis. That means you can plug absolutely anything into Oasis, if you know that. And when there are changes made to the underlying code, we don't change the API layer. So actually, it means that companies don't have to constantly change how they interact with these systems. It operates in every industry. We are behind the curve. We need to be better in the insurance industry.
So on the APIs, is that a requirement for companies that are putting models onto the Oasis platform?
The models actually are put inside Oasis, and so therefore it's the Oasis APIs that become the interface with the outside community, not individual modelling or entities or organisations. And then we also use containerization is like a massive, great big thing that's going on. It's almost like the biggest thing that many of the people in the insurance industry I talk to have never heard of. So things like Docker and Kubernetes are the ways you can containerize some of these things. So most of the models we have are containerized in some shape or form.
I think most people are familiar with an API, but could you just explain a bit more what's the difference between a container and an API, and how does that make the data accessible?
So both of them have standardized interfaces and standardized ways of putting together. So an API is just a more fundamental way of linking with external systems. These containers are usually ways of bundling pieces of software. So the problem, of course, about software is you're putting strings of software together. You've got problems. If you change one bit of it, it can change lots of other things. The thing about containerization is it's a bit like Lego bricks. So actually, if you decide that the Lego brick sitting in the middle of your virtual house in my example is wrong, you can sort of take out that one brick and replace it with another brick, because the ways that those bricks link together are standardized, right? So that Lego brick is a bit like a Docker container And Kubernetes is a little bit different, but it has some similar functions. And that's a Google open. Both of them are open source, and Kubernetes is a Google sort of spin out that came from Google. And they are just revolutionising how we're deploying software and making it much more cheaply and cheaper to build the software and cheaper to maintain the software.
It strikes me as you're talking there that there's a sort of moment in technology, and I think insurance is going through this, where we may get to the kind of Spotify moment. Whereas if you think back 10 years ago, people were wiring up their homes, they were putting a lot of Cat5 cabling in there, or some expensive hi-fi cables to make sure you have music in every room. Suddenly Spotify came along, and with a mobile phone and a Bluetooth device, you can have whatever music you want in any room. And so standards are still important, but there's this very narrow requirement for standards. Do you see an equivalent to that in insurance, where you sort of leapfrog the need to have very detailed chord-like standards, and actually there's a much simpler way of being able to create interconnectivity across multiple different types of analytics and tools?
It has to happen, and it has to happen fairly soon. I think the challenge for the insurance and reinsurance industry is who's going to be doing it. There's always a problem with incumbents being able to change quick enough, and companies like Kodak are the sort of poster child for this sort of thing, where they actually invented the sort of digital camera and digitalization instead of film. Yet we're not able to change fast enough to be able to survive. There's always a question, and this question will be pertinent for the insurance industry, whether it's in the same position. And I know people that are saying we're moving as fast as we can to make sure that we maintain viability. And I think if you're looking at the industry today, you'd probably go, yeah, it doesn't look that bad. Market shares are still the same. Companies like Trove aren't making that much of an inroads, are they? All of which is true. That doesn't mean it's going to continue to be true. So I think there's going to be an enormous change, and there'll be people in the business that will be driving that, and there'll be some external people that will be driving that, and there'll be some players that are around today that will not be around in the future because they won't be able to change quick enough. So that's the game that we're in, and it'll happen in the next 5 to 10 years.
Let's talk a little bit, Dickie, about the models you've got on the platform. It'd be good to hear sort of which ones are proving most popular. I mean, you said earlier you came in to try to break into the duopoly of cat modelling out there. So how's that getting on with the models you've got on there? And also a little bit about, if you can tell us which companies you're working with.
There are sort of essentially two strategies that people are looking at using Oasis. So one is a sort of, at the moment, it's a sort of alternative main model for some people, and then for others, it's alternative models from secondary countries around the world, which may not be so well served in any case by the two big main players. So one of those two is adopted by most people, apart from companies like AXA actually took a different approach, which was to say, actually for them the value comes from building their own models and using those, because that gives them complete insight into how these models work, which of course is a key value element of these models. Right? So, what does a good model look like? Well, critically, it's going to be one that you understand, and therefore you understand how to make underwriting decisions and risk management decisions with it.
Flood in the US, that's one area that, partly because of the way floods have been written in the US up until now, but that's changing, and FIP is starting to go out and encouraging the private market to come in. I mean, are you seeing any really credible flood models coming out from the US that may have some significant growth with the change in the underwriting environment?
Yeah, I think there are two that we're working with quite closely, one being produced by a company called CatRisk, which is an ex-RMS spin-out, if you like, and the other one's based on Bristol University. They're both very different in their approaches. Very full validation support work comes with the Bristol University one, interesting enough, because you might think that a spin-out from a university might not be good at some of that stuff, but actually they're excellent because of their background in peer review and the fact that they publish papers. And then I think CatRisk, run by Dag Lohman, has got a very, he used to work for FEMA, and then he took over, then he became head of flood modelling for RMS, and now he's got his own company. So he's got a really good pedigree, and he's doing some good stuff, and we're working with him very closely on the flood model in the Philippines. So those are some of the ones out there, but I think there are two that are on the horizon that are potentially more interesting. So one is CoreLogic, which, as I mentioned earlier on, was originally part of what's called EquiCat, where you and I first met. And they've got 197 models or something, and they're beginning to put those into Oasis, and they fully believe that all of them should be better on Oasis. We're starting with their US Quake model, so I think that's significant. And the marketplace has said to them, "We want you to put your models on Oasis," And then the last one that's sort of interesting because of the scale and opportunity is Global Earthquake Model, or GEM. So they have got a suite of global models, and we're just starting putting them into Oasis too. So and they will be very cost effective because they're open source models. They are open source. They're completely transparent. It's going to start transforming how we can consume these products.
So just looking ahead to the future, what else have you got on the horizon that you can tell us about?
I think there's a few interesting things going on. So I think one of them is, and I think this is particularly true of anybody that happens to be sort of thinking about or running an sort of new insurtech organisation, is think about how collaboration can help you drive your business model. So I'm very happy and it's entirely logical to have most companies being a normal profit-making entity. That's how life works. But it doesn't have to be the only model that makes life work. And I think there's an increasing need for collaboration. And it can actually drive sales and drive growth, I think perhaps more than just a pure vanilla sort of profit entity. So I think that's just one general observation. And we're seeing that activity all over the place right now.
Well, Dickie, thanks very much for carving out some time. You've got a lot going on, and it's been great to be here with you in the leather market, sitting in rawhide with all the buzz of the startup community in the background. But thanks very much. So, if you are either building models or would like access to the Oasis loss models, Dickie and his team would be delighted to hear from you. If you're interested in learning more about what we're doing at InsTech London, you can find full details of all our monthly events for the last 2 years and our forthcoming events at www.instech.london. You may also want to subscribe to our weekly newsletter where we comment on the latest news and provide information about our own and our partners' events.